Hey guys, it's Crossroads here. Today I wanted to give a quick Bitmine update and also talk about how Bitmine and MicroStrategy, MSTR ticker, are quite different plays beyond the obvious. That one is more in Bitcoin, the other is Ethereum as well. So let's take a look. Now, first, let's take a look at this update right here. Bitmine provides these updates on a weekly basis, and they talk about what they've been doing over the last week. Now, we had indication over the weekend that Bitmine had gone after the dip in Ethereum quite heavily. And of course, we don't know for sure. Some of the wallet addresses are just speculation, whether they're tied to Bitmine or not. But this seems like it's more confirmation of this. So they're over 3 million Ethereum at this point, which the goal is around 6 million and some change to hit that 5% goal. Now, of course, they'll overshoot it by a little bit at least. And they've talked about going up to per hit potentially as much as 10%. They still have some cash, and I'm glad that they do have some, but a lot of what they were using ended up getting deployed towards Ethereum. We don't know how many share count that they have as well. So BMNR rocks, which is just an estimate. They basically look at past history as far as Bitmine buys, the size of the buys as well to estimate the amount of dilution. And we're looking at an MNAV possibly around 1.41x. Now, we don't know whether or not, I should probably just start subscribing to them, by the way. This is a nice product. We don't know whether or not this number is accurate, but it's probably, it seems like it is positive MNAV that's over that one level. If it's in the 1.3s, that doesn't bother me much. 1.2 is when it starts getting a little bit compressed and doesn't have quite that advantage that they have traditionally to be able to sell their shares and buy Ethereum. So this will be something to see, of course, once BMNR actually reports earnings. They'll give us that updated share count at the end of the month, which will give us a good idea of how accurate this algorithm has been and also where they're at on price per share as well. Now, let's look also at the charts here. And so we can see using Robinhood Legend, this is just over the last 5 days. Of course, we had a massive drawdown on Friday. Ethereum really got sold off. And of course, Bitmine fell along with it. And we can see that both over the last 5 days are actually down. Bitmine itself is actually down less than Ethereum. Again, going back to that short piece by Carystel, it made no sense to be short Bitmine unless they're also short or negative on Ethereum. Yet, nevertheless, here we are in Bitmine, even though it was a down draw and you'd expect a leverage play to actually underperform at that point, we actually see the opposite as well. So that's certainly something to keep an eye on. Now, let's take a look here right quick at Blockworks as well. They have some really good charts on Ethereum, of course, on other crypto holding plays too. And you can see that they continue to step up their game, pun intended. This looks just like stair steps. Now, why is it a stair step like this? Well, in reality, it's not. They're buying all the time tactically for these dips, but this is just showing that weekly reporting number as well. We can contrast this with SBET, which hasn't grown meaningfully. Now, a lot of this was just from staking volume. They ran out of gas, and when you're trading under MNAV, it's dilutive, and so they don't do it. We see this as well with ETHM and also the other players as well. Just one is acquiring a massive market share, which again brings more institutional volume, which again helps all aspects of what they're doing. We can see the trading volume as well, which is something that they continue to cite time and time again as far as the liquidity. Well, I know it was in their press right here. Yeah. Volatility and liquidity. So Tom Lee said, volatility creates deleveraging, and this can cause assets to trade at substantial discounts to fundamentals, or as we say, substantial discount to the future. And this creates advantage for investors at the expense of traders. And of course, this is something that has been an advantage as well for Bitmine, just to be able to use this. Now, Tom Lee did present at a recent conference in Singapore. And so they've given a kind of an updated investor prospectus this month. Not too much different there. There's been some updated numbers, of course. But there's also a very interesting interview with Tom Lee, which highlights probably the most significant difference. Now, if you're not familiar with MSTR, MicroStrategy, or now just Strategy, and Bitmine, in essence, MicroStrategy run by Saylor is focused on Bitcoin. That's it. Bitcoin, he's a Bitcoin maximalist. And that's played out well for them. They've run up a lot more, of course, than the cost of Bitcoin as well. And also at the same time, they've made it so that digital asset strategy looks like it is a real winner as long as you can capture that market share and institutional volume, which they certainly have cornered the market for Bitcoin. So, of course, one of the differences between, of course, on the surface between Bitcoin and Ethereum, I guess I need to list one other, that Bitcoin has a finite supply. Of course, they have these halving events as well. Versus Ethereum is a proof of stake rather than a proof of work system. As a result, there's some yield from staking, which helps companies like Bitmine, because they will have, although they're not staking yet, they needed to get that figured out fairly soon. But there'll be a yield there on the underlying assets of Ethereum. Even if they're not loaning it out, they'll, of course, have some as a validator network. They may do some liquid staking, and they may do some lending as well, a combination that gives a return that will continue on in the future. Now, Bitcoin doesn't have that, but again, they have the perception that they are digital gold, and investors certainly want a piece of that as well. Now, Ethereum doesn't have an infinite supply. It has an infinite supply technically, though because of the burn from gas fees as a result, it's not really dilutive. They will want to make sure, though, just in case, have a little bit more than the exact 5.000%, since that's their goal, just to avoid dropping down and causing some noise. Oh no, they only have 4.98% or something silly like that. The other big thing with Ethereum is it's really being utilized for a lot of real projects in the Web3 world, and also some in real world commerce as well. There's a lot of level 2s built on top of Ethereum. Again, this is partly a stablecoin play, where over 50% of stablecoin volume is on Ethereum, and it's just a lot of things. I won't go into all those right there. But because of the different strategy, so with Michael Saylor, the way that they acquire more Bitcoin is by going into debt. Now, this doesn't necessarily mean it's a bad thing. We can see right here, though, that they're cash in debt. Their debt is meaningfully higher than it was before. I actually think that this number might be a little bit overstated on here, but they have debt and they don't have cash. But what they do have, even though I'm not a MicroStrategy shareholder, I do want to give them credit. They have Bitcoin. So it's not like that they just have a whole bunch of debt and no real assets. That's not what's going on here. Instead, it's this idea of fiat currency, that the United States is a fiat currency. It's not backed by anything. And as a result, Michael Saylor sees that over time, this becomes more and more worthless. Not that it's worthless now. Obviously, it has worth, because even if you're a Bitcoin maximalist, you can buy Bitcoin. So it has value. But over time, of course, inflation eats away at the purchasing power of this, versus it's the opposite of Bitcoin. And so he sees a depreciating asset of cash, and he sees an appreciating asset of Bitcoin, and as a result, sells the cash and buys Bitcoin as well. So over the long term, it'll make sense, but there is some risk. And basically, when they're using balance sheet leverage like this and going into debt, there is a risk of a liquidity event. Now, we didn't go anywhere near close to this during the down drop in Friday, but there is a risk that if Bitcoin drops far further than expected in a crypto winter, and I think that's more of a when, not an if scenario, that they could at some point be forced to do some painful liquidations, which would absolutely collapse the stock and also eat into that Bitcoin reserve that they had, as they're forcibly liquidating at least some of that as well. Now, there are alternatives if they get down at that point, and I think that they've been established long enough that they'll be able to get some lifelines from some other companies and corporations if needed. And it's probably not needed, but it's something that still needs to be taken into account as a MicroStrategy investor, if you are one, that there is some risk there. For Bitmine, what is the risk? Well, they are not using debt at all. And so Tom Lee has actually asked about that, as liquidities were asked about quite a bit over the weekend. Let me pull up this, just a snippet of this CNBC interview where he was asked on that direct. All right, here we go.
At 3,600, and Ethereum's back to 4,200 now.
So how do you protect yourself? Do you have leverage? And what would you suggest to other investors who are watching right now?
Well, as a first principle, Bitmine, which is the largest holder of Ethereum in the world, doesn't use any leverage. It's a fortress balance sheet, taking a page from Jamie Dimon's playbook. Large holders have a responsibility to have a super clean balance sheet, and that's a first principle of Bitmine. I think most people I know in crypto do not use leverage because they've lived through those systematic drawdowns. So I think most people who have a lot of experience avoid leverage.
Of course, MicroStrategy is an exception there, but it doesn't mean what they're doing is wrong or it won't work out. Just that there's some more risk there as well. So Ethereum, it can collapse and do one of these massive wick downs where it goes. It's not going to do this, or very unlikely. If Ethereum goes down 99% on a single dip for whatever reason, and then it was some silly thing and it's resolved and it goes back up mostly where it was before, that would cause a lot of people that are leveraged to be liquidated. It would be very painful, awful, and terrible for the ecosystem. But for Bitmine, it makes no difference. Now, Ethereum going down is not good, even if it's a wick down, but for them, it's an opportunity rather than an exposure to an immense amount of risk. And so that really is the significant difference between the strategy of strategy, MicroStrategy, MSTR, which they're called strategy now, and also Bitmine, is that risk. Of course, Bitmine as well is mostly focused on Ethereum. They do have some Bitcoin. They do have some Bitcoin miner equipment stuff too, but most of who they are is focused very much on Ethereum. And so that's, I think, the best way that we should perceive it. So regardless, this is a great update. It's great to see this level of conviction for Bitmine that they continue to buy and hold and add a number of Ethereum tokens. They still do need to figure out the staking stuff. And, before the end of the year, that needs to be done. But I appreciate these updates. I'm glad that it's a play where even if you're having these massive wick down events, that they're not going to be liquidated. We don't have to worry about that as Bitmine investors. It's the whole fortress balance sheet idea coined by Jamie Dimon back in the day. Anyway, let me know what you think in the comments. How did they do this week? Would you have liked to see them add even more Ethereum than they did? Or are you glad that they're keeping some money there in the system? And is there something that I missed? It's a significant difference between the strategy of MSTR and Bitmine as well. Love to hear in the comments. As always, thank you guys for watching, commenting, and subscribing. Until next time, happy investing.